The 4-step method to high-performance trading and the 7-step daily routine for high-performance traders are both free downloads. The 4-step method for high-performance trading is about developing the mindset and the routines to increase your confidence and your ability to execute your trading edge in a live trading environment. Constant progress. 7-step daily routine for high-performance traders is an audio program download designed to help traders bulletproof their day-to-day habits, discipline, and develop a winning mindset. Again, the link is in the description box below. They're free downloads. Let's get started. Just reminding traders, if they're new to this channel or if this is the first time you've seen this video, if you go to this playlist, everything you need is in this playlist as it is titled. We go over the templates, the timings, the levels, the behavior of price. This will help to bulletproof your understanding of the best trade setups in the playbook. Again, these are free videos on the YouTube channel to support and enhance the skills and the development of your trading prowess within the playbook itself. Everything you need is in this playlist. Today we're going to be going over and comparing well-engineered charts. You've heard me use the phrase. It's a short video today. Welcome back, by the way. Happy New Year. We've had a tremendous holiday and a big bang start to the new year. And again, as I reiterated to traders through the December period, as you are aware, trading is optional. I took a week off, but there are several opportunities with well-engineered charts. No major red news on the calendar between Christmas and New Year's. And so the question comes up repeatedly to me, what do you mean by a well-engineered chart? And I use the phrase, you make money on the days that it's easy to make money. Now I want to reinforce a simple concept in that I'm hunting out best trade candidate setups. And we're going to acknowledge some different chart comparisons today. We're not going to identify what instrument it is because it's irrelevant. It's the setup that I'm hunting for. And so as I tell traders, my approach is this. I could care less what I'm trading. I know there are traders who focus on one instrument, or they have their favorite three, or they only like to trade one particular instrument. And as I have always repeated, if it makes you money, then by all means keep doing it. Now, if you're struggling, or you're struggling with consistency, or you're making gains, giving them back, making gains, giving them back, my approach is this. I hunt out setups that are 90-10. And 90-10 means that I've, over the course of many years, put pieces together to help me, number one, have a process to identify the simplest, best candidates on the day itself and over the course of the week. Now, taking that information and compiling it into my own personal playbook, and then utilizing that information to grow and scale my trading business in size. And so when you understand what a parabolic opportunity is, or where a 90-10 trade setup is, that will help you filter out, number one, garbage charts on the day on your favorite instrument. And perhaps maybe my approach is this. I don't care. I'm scrolling through looking for the templates as I'm heading into the US window, or on the backside of a move, perhaps in the Asian session, occasionally on the front side, because I have the luxury of having Asia early evening, and of course the New York session first thing in the morning. Now, when I was in Western Australia, we were Asia to New York. New York sometimes was difficult as it was late at night, but a well-engineered template is worth staying up for, or sometimes getting up earlier for. Now, there are multiple different types of trading setups. In the playbook itself, I focused mainly on first red day, first green day, inside day, low-hanging fruit, and 3-day setup opportunities to give traders the simplest, biggest blueprint to be able to identify 1 or 2 trades a week that were scalable opportunities. Now, that again comes back to psychology, in that traders are, obsessed with they got to trade every day, but they're trading their favorite instrument and they're trying to trade movement or trade direction, which is fine, entirely your choice. My approach is I'm hunting out an instrument that has a 90-10 setup edge, meaning that I'm looking for the same types of charts repeatedly where I have almost zero chance of losing, as opposed to trying to trade an instrument that doesn't offer me any edge at all, just to compare 2 types of charts. No edge for me, but there will be traders who want to be, buying the lows and selling the highs in a market like this. Now, when I state this, I'm telling you from my perspective, the perspective that I have when I approach the markets. I'm looking for an opportunity that once I'm entering into this market, I can scale into it and potentially add size into a trade that's going to continue for 40, 50, 75, maybe 100 pips or more. And then when that trade has hit its target, which is measurable, and the method that I use in terms of targeting extended range expansions, timings, knowing the behavior of price when that move has reached the distance that it's likely to travel in that session, I lock in the money and I walk away. I'm not scrolling through a bunch of different instruments trying to catch more moves or grab some more pips. Where can I make as much money as possible on a well-engineered chart? Trading a chart like this would be me trying to show how good I am at buying lows or selling highs, which is not my objective. And again, I'm not critiquing that. I'm talking about where do I have an edge in the market that I can scale into, and I see that setup repeatedly, and I can rinse and repeat that setup on any instrument. How does the market set up to create an opportunity where I can scale into this trade and it offers me a parabolic range expansion where I can minimize my downside, control my risk, and still be able to add positions into this market? Timings, levels, behavior of price. What are the setups that will allow me to target these types of opportunities, and again, avoiding low probability, low quality types of market conditions? The difference between two charts: one, choppy, volatile. There'll be traders trying to trade this because it went to a high or it broke a low, or whatever their criteria are for trading, where again I'm forcing myself over years of cutting my teeth over multiple different trial and error types of trading disciplines to simplify a process that allowed me to identify market conditions that were going to be highly probable in my favor and scalable in size over time, instrument irrespective. Do they all have to be home run trades? No, they don't. But do they, on the day itself, I may find one or two instruments that are set up, and I may choose one to trade that still gives me asymmetrical risk reward opportunity. Trading, looking for a chart that is well engineered in terms of its price action over the course of the day heading into the US window. If you're trading Asia, if you're trading London, the same criteria would apply in terms of understanding the setups that allow these instruments to set up for a coiled explosive move, where again I have virtually zero type of risk, and if I am wrong, then I'm wrong right away, and I can manage that downside very quickly, as opposed to, and also if I'm right and I can scale into this opportunity, how much am I willing to risk on this trade itself in terms of risk reward opportunity? There may be days where the market has a large range, but does it offer me a significant opportunity, or is it a nail and bail type of opportunity? Where, yes, okay, there's an opportunity for me to trade this, but the risk reward is limited. I'll take what the market gives me, and I will lock in the money and get off the screen. So understanding the types of trade templates on the day is critical. You can identify trigger days, signal days, as we talked about with our first red day, first green day. Inside day, we have parabolic setups. We have 3-day setups. We have 3 days of breakout traders in the markets. But recognizing whether or not a chart is well engineered and offering you that trade setup in the timing window, whether it's 50 pips, whether it's 25, whether it's 150, and the type of template that you have on the day. Now you notice I have no other criteria on this chart, and my homework recommendation to you would be to scroll back through, understand the days of the week, the opening range, the initial balance, the type of template that is set up on the day. And you should be able to scroll through 10 or 15 charts on the day to identify one or two high probability candidates and narrow it down to one, or trade both if that is if you are so inclined to do. Now I typically will look for one or two high probability opportunities. Sometimes those opportunities will come in the first hour, whether that's gold, oil, second hour, or we may get a third hour opportunity on an index, again, oil. There may be a news catalyst opportunity. But as your skill set is developing, keep it simple. Focus on one or two instruments. Narrow it down to one. Focus on flawless execution of that trade setup on the day. There may be days where there are major red news on the calendar. The template does not offer any quality setup whatsoever in your session, or if it does, it may be in a different session. It may have moved. But when you get to your session, whether again that's Asia, London, New York, is there actually an opportunity for asymmetrical risk reward? Recognize when the upside is very limited and you can spend an hour and a half at the screen for a chart that is not going to offer you any high quality opportunity, or if indeed you do get into a trade, you'll sit through an hour or two of stress, probably with no size, just hoping to get out at break even, which again comes back to having a process where you can identify the best candidates, not only on the day itself, but over the course of a 3-day template, Monday, Tuesday, Wednesday, Wednesday, Thursday, Friday, for a high quality asymmetrical risk reward opportunity. There may be a fantastic opportunity in the London session on an instrument, but offer very limited upside in the US session for traders, where traders may get stuck or fixated trading that one instrument when they miss out on a high quality, easy money trade on another instrument in the same session. Being able to recognize a chart that on the day it's easy to make money on. What are the days that it's easy to make money on? What do those templates look like? Scaling in with size, zero stress, zero heat, locking in the money and getting off the screen. Now we're going to have we're only in the second day of the new year, new month, and I encourage traders to go back and look at your daily charts and understand the importance of timing, the beginning and the ends of months. As we've talked about, there's a video of that on the channel. We'll do a new one this week. But it's so critical to recognize what a well-engineered chart is for making money on the day. Trying to trade movement is the furthest thing from my mind. I could care less about any of that, trying to trade catch moves. I'm looking for well-engineered templates that offer me the opportunity to make easy money on. So scroll back through your charts, do some homework, understand what a well-engineered template looks like. How do those templates set up? Focus on the process of identifying the best instruments. Signal days. We have criteria that is so simple. It's so simple. If you can count to 3 and tell time, you can make a lot of money. Welcome back, traders. It's going to be a huge year. Great to be back. 1% better every single day. And may the markets go with you.